Hello and welcome to ATFX's Federal Reserve Rate Decision Preview. My name is Nick Twidale. I'm one of the Chief Market Analysts. And in our video today, we're going to have a look at a couple of the charts and a couple of trading opportunities that are going to come out and what we're expecting to get from the Fed this week. Now, in all honesty, we are 90% priced in to get a 25 basis point cut from the Fed. And that's been really firmly baked in really since the last non-farm payrolls numbers, and some would say even before that. There is now, because of that data and the waning jobs market, the possibility they could even go 50 basis points. Now, I don't think that's going to happen, but there's about a 10% chance priced into the market. And if we did get that eventuality, it would really hit the market, and it would hit the market hard. Imagine Treasury yields would get really smashed very hard in the US, as would the dollar, and we'd probably see some fairly sharp moves and maybe even some big corrections across the US. Initially, it would be a nice supportive move from the Fed for stocks, but maybe longer term, if they're seeing some real storm clouds on the horizon, it may turn sentiment. So keep an eye on that. That's unlikely to happen. What we're really going to be looking for with that Fed rate decision is going to be on the statement that we get from Jerome Powell and the rest of the team, as well as the economic projections or the dot plots. Now, that comes out at the same time as the Fed rate decision, which we're firmly expecting is going to be 25 basis points. But that dot plot could be very interesting if we start to get a more dovish leaning from many members of the FOMC, which is obviously something that the White House wants to see. That could put some more pressure on the dollar that's trading not too far off annual lows and very close to monthly lows at the moment as well. A break further there could see the dollar break south, and we'll look at some of those trading opportunities that are coming up. After that, we've got about half an hour. I'm just going to check that it is half an hour after that, where we get the Jerome Powell press conference. That press conference is the likely time that we're going to see the biggest moves in the market, as he gives us some greater forward guidance. And there is a risk here that he remains relatively hawkish to what a lot of the market want to see. Don't forget, the market is now priced in 73 basis points worth of cuts by the end of the year. So essentially, we're talking about 325 basis point cuts. Obviously, a 50 basis point cut puts the cat amongst the pigeons. But that's what we're looking for. And I personally, and a lot of other commentators out there, feel that the potential at the moment, we're probably not locked in those three rate cuts. And I'm thinking it's closer to 50 basis points than 75. That could see a rally in the dollar. That could also see stocks take a little bit of hit and Treasury yields move to the top side. So fascinating moves ahead. What we also have to take into consideration is we've got a fair few other central banks out this week. So we're focusing on the Fed today, but we've got the Bank of Canada only a few hours earlier. They're also expected to go by 25 basis points. The next day, we have the Bank of England, who are going to hold, or most people are expecting them to hold, I should say, as is the Bank of Japan on Friday. But could be some really good trading opportunities, and stay in touch with ATFX's video updates for those. There should be some coming through. Right, I'll just flick over to a couple of our charts where we're going to look at some opportunities that could come from this Fed rate call. So first one we're going to look at, and it does look like a really good opportunity, and I've kind of been calling this for a while as this flag shape in the euro. This is the euro daily chart coming in here. We're approaching some key levels. This support trend line has been working really well. As you can see, 1, 2, 3, 4, 5, 6 separate points. I think I could draw that a bit better. Support coming in around about 116.90 at the moment, but we've got lows down here, 116.60, 115.73 as well. This would come, I think, if a break to the downside could come if we did see a hawkish leaning from Jerome Powell and a little bit less dovish from the rest of the committee, which could come from that dot plot. We'd see the dollar bought, bit of a rally in the dollar, euro breaks to the downside, and it could open the way for a nice move back down to these lows that we saw way back at the beginning of August. It doesn't seem that long ago, down at 114. Conversely, of course, that if we do look, first of all, if we got that surprise 50, it would take off to the top side, and I think it would smash through that resistance level around about 118. Previous highs up around 118.30. But if we got a more dovish leaning across the board and we got those three rate cuts nailed in, if that came from the dot plot, or it comes from the statement or from Jerome Powell. Expect the euro to move. Initial resistance around that 118 level, but a clear break above there will probably take us up to the next cycle level around about 120. Okay, I'm going to move over, have a quick look at dollar yen as well, because that could move very much in the next few days with the Bank of Japan coming through as well. So dollar yen is trading also sort of coming into tighter ranges, trading in the middle of the range at the moment. We're sitting around 147.50. Resistance initially coming in on that 200-day moving average at 148.71. And that could, in the next couple of days, coincide very closely with that resistance trend line that we've got coming in. Once again, a move up there would probably come with a less dovish Fed dot plot, and also a potentially slightly hawkish Jerome Powell taking the move up there. Obviously, the extent of that would dictate how much of a move we get up. Break there, 150 is the next level, and then of course we've got these highs up here around 151 or just south of 151. Conversely, of course, the other side of it, which I think is the way the market's leaning really, is we do have a more dovish indication of how we're moving forward. We look to lock in those 3 rate cuts with some even pricing in 4. Then we're going to revisit these lows. They're fairly far away at the moment. A couple of big figures, 145.80 at the moment, probably be around about 146 in the next couple of days when the Fed comes out. A break there takes us down to challenge these lows just above 143, the figure. Last thing we're going to look at now, we're just going to jump over to our gold chart as well. Obviously, massive moves in gold over the last few weeks. We hit last week, or the week before, I should say, we hit consecutive fresh new records on a daily basis. It has consolidated, but it's consolidated up at these highs in the 3600 or mid 3600s. There's that high, 3673, 3674 for mates, I suppose, out there. This is where we could see another real move. Now, part of that move has obviously been on some haven buying. Gold's obviously seen some huge moves over the last couple of years. But a big stretch of this last move has come after the non-farm payrolls, after the last 2 non-farm payrolls, it has to be said, where we've seen the sentiment for the dollar really change. Big break of that all-time high that we had previously back from the 21st of April. That's taken us another couple of percent higher at least. And this could be the next catalyst that we get that takes gold higher. It would come with a dovish Fed. It would come with a certainly less hawkish Jerome Powell. And it certainly would come if we got 50 basis points. So big moves there. Conversely, of course, the other side of that, the move would come down if we did see a less or a more hesitant or more data reactive Fed. That could see us take down. Support now coming in near that initial break. Haven't put a topside resistance level. It's just going to be on that recent high. Support now around about that 35 level. That was the previous break. Further support coming in down 3400. So plenty of trading opportunities coming up on this Fed decision. Plenty of permutations and combinations could go. There is no doubt that we will see movement before this event. There may be a little bit of squaring up. Might see some stocks just easing off. May see the dollar just catch a little bit of a bid tone. Certainly around the event and even during it. So once we've got that gap between the rate call, the statement being allowed out at the same time as the dot projections, and then we've got the press conference later. Expect plenty of volatility for the dollar and plenty of volatility across markets. Then the longer terms guys will come in probably in the next few hours after that announcement, and indeed in the next few days. So plenty of moves to come out. Interest rate differential trades could be the winner for FX traders. Good luck. If you need anything from us at ATFX, please do let us know. Thank you.